Hello, everybody. It feels like it's been a while. Lisa McInnes Mortgages with Marico Paragon Mortgage Inc. Happy New Year. I hope you are all doing well. I'm going to give you my disclaimer, a typical disclaimer. I'm sorry if my dogs bark in the background. They are in the basement, so hopefully they won't be as noisy, but yet we'll still likely hear them. I'm very excited to have Rebecca with Frederick and Company with us today. She's a licensed insolvency trustee. Did I say that correctly?
Yeah, you got it right. Absolutely.
Perfect. And she is unfortunately having some technical issues with her system, but we didn't want to delay in getting you this information because with everything going on in the world right now, I felt it was very important to have an expert speak with us on what she does. So I figured, you know what, let's just jump right in. And unfortunately, all you get to see is me, but you get to see Rebecca's beautiful picture as well. So Rebecca, thank you for coming on and taking time out of your very busy schedule. Really appreciate it. And I'm basically just going to give the ball to you, and we're just going to have a discussion on what you think people really need to be thinking about right now, what it is you do, and if there's any tips or steps that people can take if they're experiencing financial hardship right now. So take it away.
Oh, thanks so much, Lisa, and thanks for being flexible about my video issues. I actually broke my laptop over the course of the holidays, and so I've got a new one on order. So it'll it's going to take some time. But thanks for being flexible about making this work. This is amazing. Yeah, so I'm a licensed insolvency trustee, and I help people that are struggling with their finances, their debts, and ultimately try to help them find a solution to get moving forward. And so I think the one thing that I think would be really important for people in general to know. I mean, I guess I'm going to say that a couple times. The one thing. There's more than one thing. But the one of the things that's important for people to know is that the sooner they, really consult with somebody to get some options, the more likely they are to be able to avoid a bankruptcy or proposal or something kind of, the air quotes worst case scenario. So the sooner we're dealing with the issues, the sooner we can kind of get on top of them. And I think that is something that's really important because there are some assets that are protected from creditors that are assets that are typically um, redeemed in order to kind of pay down debts, and one of those assets are RRSPs and RESPs, and pensions. A lot of people kind of try to withdraw money early out of a locked pension or a LIRA in order to kind of pay down their debts, and those assets are protected from creditors. And so for me, when you're taking an asset that is already by law protected from your creditors and using it to pay down your creditors, I think that is a really good time to stop and kind of calculate and make a calculated plan about, if that's the best course of action or not. If it and ultimately we kind of take a position of like knowledge is power. If you knowingly redeem your RSPs to pay down your debt, and that gets you debt free, and that is an educated choice, then that is fantastic. You had the information that you needed to make an informed choice, and you made it right. What we're trying to do is get education or information in front of people so they can become educated about what their options are, so they can make that educated choice before they start, selling assets that would have been protected from their creditors, and start with a plan to get moving forward, managing debts. And as you know, COVID has had a serious impact on a lot of us. I mean, it's interesting, the dichotomy with COVID, because I see lots of businesses, flourishing. IT companies and things like that are really, just doing really really well. And then we have the opposite in other industries like restaurants, right? That are that's because they can't open. And I know COVID restrictions in Alberta have been extended to January 22nd, right? So again, we're, restaurants are facing an extended period of time without being able to open their doors and have people come in and dine with them. So that absolutely negatively impacts them. So it's you can kind of be in either camp along the way. And so for those people that are struggling, we want to be able to get in front of them sooner rather than later so that we can help them make that educated choice.
Perfect. That's awesome. So then, I have so many questions that just run through my mind, and I just got to kind of pick and choose probably the most important ones to get out there. I think one of the first ones would be, do you deal just strictly with individuals, or do you help the the incorporated businesses or the sole proprietor businesses as well, or do you do it all?
Um, licensed insolvency trustees can help um, consumers, uh, business owners that are consumers, like the sole proprietorships. That is an individual, a person who's running a business, and so that kind of falls under the consumer scope of things. And then and businesses as well. So that goes from like smaller businesses all the way up to the CCAA's. The people that are managing those, that's a licensed insolvency trustee. So when Air Canada did their CCAA, many years ago now, licensed insolvency trustee was in the thick of it there. So yeah, as a licensed insolvency trustee, we can help a wide range of people and businesses. For my business personally, we focus on individuals. We do individual filings, but we also say that we help small business, because a lot of times with small business, if you have let's say a business as a plumber, if it's a smaller business, usually it might be one or two guys with one or two trucks that are usually fully secured to a bank or a leasing company, right? And so a lot of times, with those smaller businesses, they have assets that the bank already has an interest in. And so with bankruptcy and proposals, what we're looking at doing is helping them kind of deal with unsecured debt, right? But if all the assets they have are secured and protected, um, then often the business, kind of the bank will come and take those assets that are secured and protected, and then what we do is we deal with things on the personal side. So because a lot of times with small business, if there's been GST or source deductions or something like that unpaid, then that can often, if those are unpaid, those will fall to the director to pay if CRA makes an assessment against the director, or when CRA makes an assessment against the director, because that usually happens. Sorry, kind of getting into the minutia there, but basically with small businesses, what we find is bankruptcy is not often, can be a bit of an overstep, a bit too much. The business kind of shuts down and ultimately gets struck from the corporation after a couple of years. But we still need to help that business owner get moving forward, and so we definitely help them on the personal side, on the consumer side.
Perfect. Okay. I think the next question, and I'm not sure if this is going to lead us down the rabbit hole or not in terms of time, but what is the difference between a consumer proposal and a bankruptcy in terms of the clients? So what are your main differences there, and why would a client pick one over the other?
That's a really good question. So what a bankruptcy is a period of review, and so uh, it's a period, it's a process that kind of reviews the debtor's financial circumstances for a period of time, in order to kind of rebalance things between the debtor and their creditor. When you can't pay everything and you can't pay nothing, how do you find that fair middle point for all parties, right? And so that fair middle point is different for everybody, because everyone has a varying ability to pay. If you've got a lot of income, then you have a greater ability to kind of chip in towards your creditors, right? But if you're on EI, you definitely are kind of meeting your basic expenses, and that's about it, right? And so the nice thing about the bankruptcy process is that it takes all of that into consideration. If you are if you're making let's say $5,000, you're a single person, so it's just your mouth that you got to feed, right? Then you have some discretionary um, um, you probably have some discretionary funds left at the end of the day, and those funds should be chipped in towards the creditor. So there's a calculation that kind of that goes through that, and we won't go into the details there. So that's kind of the idea about bankruptcy: rebalancing between the debtor and the creditors. We're looking at income. If there's a greater ability to pay and chip in, then that's kind of the expectation. And again, if there isn't, then there isn't that expectation. And then we're also looking at assets. But remember earlier we were talking about assets that are protected. Assets are protected. Those same assets are protected in a bankruptcy as well, right? So those RRSPs and RESPs are protected. Life insurance products are protected with specific beneficiaries, and so those are usually the beneficiaries that we have. Our parents, our kids, or our spouse. Those are protected assets. And so those protected assets are, and house, because you're a mortgage broker, so you're dealing with houses all the time, right? So the equity in a house that's protected is $40,000. Okay, so there are protected assets along the way, and those assets are still protected in a bankruptcy. So the assets that we'd be looking at in a bankruptcy to have the value come into the pot is non-exempt assets. So extra assets is kind of an easy way to think about it. So the exempt assets are assets that are protected from your creditors and are kind of necessary, right? You need the shirt on your back, you need a bed to sleep in, you need a house to live in, right? But you don't need a mansion and a Maserati free and clear, right? So that's why there's sometimes some limits on the exemption values for certain assets. And then there are non-exempt assets. So the quad and the holiday trailer, the cabin, the second vehicle, those things are non-exempt. And so what we're looking at is just the equity position in those assets. And so if there's a security against that asset, then there maybe not be any equity in that asset. Like in a vehicle, we can often see, a vehicle that's worth $30,000 has a $40,000 loan against it. So that doesn't have any equity. And so that kind of doesn't come into play. So that the $30,000 vehicle, that's the $30,000 isn't the relevant number. The relevant number is how much equity that car has. So with a bankruptcy, what we're looking at is any of those extra or non-exempt assets that would have to come into the pot that have equity. And so if there's a quad or let's say there's a quad with $500, well, then that $500 value needs to come into the pot in a bankruptcy. So that doesn't mean you have to lose your quad. That just means the value of that non-exempt equity has to come into the pot, and that could be paid in by the debtor over a couple of payments, and then he'd have that $500, squared away, and that would be the cost in a bankruptcy. So you can tell, like, the minutia is kind of important in these processes. So we're looking at the outset, what income do they have, what assets do they have, and then over a period of 9 to 21 months for a first-time bankrupt, we're kind of looking at income and expense statements to see, has that income increased, has it decreased, and then we're going to use the income calculation for the averaged income over that period. And so that's kind of how bankruptcy works. It's a period of review. We're looking at assets and income over that period of review to determine what ultimately the cost would be into a bankruptcy. So because we're looking at future months, bankruptcy is an uncertain process in terms of what the bill is going to be at the end of the day. Because if someone's on EI and then they get a job and they're making a lot more money, then their payment is going to go up. If if they had a really well-paying job and then they ended up being laid off, then their income might, that income payment might go down, right? Because so it's nice because it kind of gives and takes with whatever's happening in your life. But if you were to come to me at the beginning of the process and say, okay, I'm really interested in bankruptcy, how much does it cost? The best I can do is a guesstimate based on what your income and assets are today, because I don't really know what the cost is going to be for you, down the line, right? Because I think this year has proven, beyond a shadow of a doubt, is that we can't foresee the future. We don't really know what that's going to look like, and so with and that's and so what is bankruptcy going to cost? I don't really know. But I can use you can use my, I can do a bit of a guesstimate and look at what assets you have today and what income you have today to kind of make that calculation. So what assets are just those non-exempt assets, and then the income we would assert that calculation and see if there's anything kind of additional that needs to be chipped in. So that's bankruptcy. Bankruptcy is a process. It's You're kind of signing up for, to be reviewed for a period of time. And what a proposal is, in contrast to a bankruptcy, is just a payment arrangement. So if we look at bankruptcy and we do all those calculations, and you could and we land at, your creditors are going to get 10 cents on the dollar. So that means that for every dollar outstanding to them, they'll get 10 cents, or 10% of what's outstanding to them through a bankruptcy process. Then what a proposal process is going to do is offer a better advantage to those creditors than what the bankruptcy would. So if that bankruptcy is offering 10% to creditors, then the proposal is going to offer maybe 20%, 25%. And so what we would do is figure out, what the cost of that is, and look at your budget, make sure it's sustainable, and make sure it's something that you can afford. But in the proposal, what it boils down to is just a payment. So it really takes away the scrutiny that a bankruptcy would, in terms of, what does your future income look like? What is your, if you got an inheritance in a bankruptcy, that could come into the pot, um, if the bankruptcy was still ongoing. Whereas in a proposal, you could just use that to pay down the proposal. So the proposal is not a review. It is a payment arrangement. And once you shake hands with your creditors, figuratively, and agree to whatever that number is, then that number is the number, right? So you're just going to kind of keep plugging away and making that agreed payment, and paying that thing off over the course of the proposal. But if you come into a tax refund and you want to put a chunk of it down, you would do that. If you come into, some additional money, or if you get that job or that raise, then you can pay down that proposal quicker, and you can be done a lot sooner. And so that's kind of one of the benefits of a proposal, is you can pay it down a lot sooner. But there's uncertainty in the proposal process too, and so that's it's kind of important to talk about that, because with a proposal, your creditors get to vote, so they get to say, yes, this is a great deal, and I will accept it, or no, I don't want this deal. And that doesn't usually happen. Usually it's no, but if you give us a little bit more money, then we'll say yes. So it is really ultimately the beginning of a conversation with your creditors, where you're extending an olive branch, saying, hey, I can't pay you everything that I owe you. Look, bankruptcy is going to give you 10%. I'd like to offer you 20%. Would you agree to to that? And then you'd begin that conversation, and maybe land at 22%, and shake hands, and then that's the number. And so that it doesn't matter what happens in your life after that. That's the number. And so it provides a lot more. It provides a lot more certainty in the end, because we know exactly what your obligation is, and a lot of people like that.
Perfect. That's awesome. One thing from the mortgage side that a lot of people don't realize, like with the consumer proposal and the bankruptcy. So when you're done your bankruptcy, you actually get discharge papers, correct? Like it's
Yeah.
official legal documents. And I think it's the same with consumer proposals as well, right? You get like stamped paperwork.
Yes. You
You're
bet.
all done. So anybody who is going through this process, please, if you learn anything from this, keep those documents, keep them safe, do not get rid of them, because both of these procedures, I guess I'll call them, they stay on your credit bureau for a while. Like it shows up for minimum 6 years. If you've been unfortunate enough to have a double bankruptcy, it actually shows up for 14 years. It stays
Yeah.
on your
Yeah.
credit bureau. But when it comes time to, if you want to restart and rebuild, all my lenders are going to want to see the discharge papers, and they're going to want to see the list of the assets and the liabilities that were included in both of the processes. So make sure to keep all that documentation and don't get rid of it for, honestly, just keep it forever, because who knows when it's going to pop up again, because sometimes things don't get taken off your bureau by accident. So
Yeah, absolutely.
those are the good documents to keep. And the other piece of advice that I want to give people is, once you are done your bankruptcy or your consumer proposal, that is the time that we need to start looking at rebuilding your credit. Because lenders, again, in the mortgage world, want to see that you've reestablished your credit with a major lender. So a lot of times my lenders are not accepting your Capital One cards or some of the secure cards. So when you're at the point where you're discharged and everything, Rebecca, do you help people at that point? Do you help them with reestablishing, or is that out of your scope?
Actually, we encourage people to start reestablishing during the process. I've heard, I have another mortgage broker colleague who told me that she had some clients that did such a good job of reestablishing their credit during a consumer proposal, that they were able to get a mortgage right after, like the day after the proposal was completed. So we definitely are proponents of that and are talking about that. There's two counseling sessions that are part of a bankruptcy or a proposal. And in those counseling sessions, one of the things that we're talking about, they're financial counseling sessions, just to be clear. One of the things that we're talking about are is that credit rebuilding part of things. So how, what do you need to do to rebuild your credit? You can't just like kind of leave it and hope for the best. You definitely need to take a very active approach to rebuilding your credit once you've gone through a bankruptcy or a proposal.
Yeah.
And with the so yeah, with a bankruptcy, it's 6 years, like you said, after a first time bankrupt, 14 after a second time. The consumer proposal is 3 years, so that's what can kind of make it more attractive, a more attractive process. If you can kind of end up in a really paying your proposal off early, um, then you can kind of end up, you can end up reestablish your credit just that much sooner, right? So reestablishing your credit is totally possible in a bankruptcy or proposal, and we talk about doing that, on day two, right? Like, okay, which is, we would just say maybe take a break from credit for a little bit, take a breather, get on a basis for a bit, and it feels so a little bit wrong to be like, and now get back in the saddle, and get more credit. But usually what they're doing is getting those secured credit cards, right? But then you need to be building up from there. So you should have one credit card that's secured, and then you'll get a second credit card if it needs to be secured. Do that, and then once you have those for a while, then we want you to kind of build into to approaching the bank to get a bank credit card, because those definitely hold a lot more weight than, like you said, the Capital Ones. And so yeah, this is definitely something that we talk about through the process. The other thing that you talked about was discharge papers, and I wanted to kind of touch on this. Every once in a while, we get somebody who is like, "What? I'm not discharged from my bankruptcy. What the heck?" And so to kind of further your point, if you don't get a piece of paper that says you are discharged, please don't assume that you are. You need a piece of paper. It's there's only three things it could be in a bankruptcy. It's an absolute order of discharge, which means you're absolutely ordered to or discharged from your bankruptcy with no strings attached, right? There's a suspended order of discharge, which means there's probably some a time delay before you would get discharged, or there is a thing called a certificate of discharge. So those are the three things that you would get that would discharge you from a bankruptcy process. And if you do not have those things, um, then you should approach your trustee to get a copy. And if you don't have And if you approach your trustee and they say you're not discharged from your bankruptcy, which sometimes happens, then that's something that we can help you out with to kind of help you navigate that. There's a thing called a proposal out of bankruptcy that allows you to kind of scrub that bankruptcy off, and just replace it with a proposal. So there are options that we can do to kind of fix that after the fact. I know some people that kind of just leaves people feeling like they're kind of hanging in purgatory, but we can fix that. That's absolutely doable. So if you're in that position, just give us a ring. But yeah, the discharge papers are such an important thing. And if you don't have them, you can actually end up staying in bankruptcy indefinitely without a discharge. So make sure to have those on hand for sure, just to further your point there.
Perfect. That's really good to know. Um, I think we've gotten some really good information out. Is there anything else that you want to touch on before we sign off? Like just that you think is really important that we haven't really hit the mark yet on?
I think, as I talk about things, I try to make it as simple as possible. But there's a pretty thick act, the Bankruptcy and Insolvency Act, that dictates kind of everything that's involved in my job as a licensed insolvency trustee. And so there's a lot of nuance to this process, right? Uh, and so um, and so if you're at all at the end of this conversation feeling like, oh my goodness, there's just so much to know, there is. I agree. But when we're talking about you and your situation and your we're not going to talk about if this then that with other people. We're going to talk specifically about your unique circumstances and help you understand what's going on for you and where you know and what options are available to you to kind of get moving forward. And so and I guess the other thing I would say is, you do have other options. We talk about, what if you can kind of budget your way out of this? What if you could sell some of those non-exempt extra assets, to kind of fund your debt repayment, to get your debt payment down to a number that is manageable for you, right? There's consolidation loans, there's informal settlements, there's um, um, Money Mentors does that orderly payment of debts, which is a great option, and bankruptcies and proposals. So there's lots of options out there. And so if you are if you have any questions about where you're at, go see a licensed insolvency trustee. You can come and see us. And if you're talking to somebody and they're not kind of going through all of those options, then get a second opinion. Get some more information and find somebody that is willing to kind of give you an education, because you should feel educated at the end of it and being able to make this decision on your own. You shouldn't feel like someone has kind of handed you a prescription. Here's bankruptcy, here's proposal, this is what you should do. This is not a doctor's office. You should be educated, fully, so that you can make a decision that is going to work the best for you, given your unique circumstances, and what is most important to you. If what is most important to you, is keeping your house, then I'm gonna we're gonna explore that option. We're also gonna explore the option of letting we're gonna explore the other options, right? Like if you have a house that you owe more than you owe more money on your house than what the house is worth. Even though I know you want to keep the house, we're going to talk about what keeping the house looks like, and that when you owe more money than what the house is worth, you are kind of taking a chance that down the line, and that so we're going to talk about kind of the repercussions of all of that, so that you can make an educated choice. And if you still want to keep the house, that is your choice and only your choice to make. And so yeah, so making sure you find somebody who's empowering you to make those choices, giving you all the information with which to make those choices.
Perfect. That's awesome. And that's how I like to
If you're being handed a prescription, then you need to, maybe find somebody else that to help you through this process, because that shouldn't be how the process works.
perfect. That's all. Yeah, that's how I like to run my business, is by education, really. Allow you to make the best choice for you and your financial goals. So
Yeah,
I
exactly. And talking about, I know from experience in working with you, you talk about, yeah, you can get a mortgage at a higher interest rate. Here's the problems with, here's the pros of that. Here's the cons of that. Here's what you need to do. If you're going to be in a short-term mortgage at a higher interest rate, then you need to be building towards getting into one of those A mortgages. And what do we need to do that? Right. So it's all about, it's not transactional at all, which is one of the reasons why you're such an easy referral to make, Lisa.
Oh, well, thank you. And as you know, anybody who is in need of your services, people really, Rebecca is such a kind-hearted person, and she will educate you and you will feel empowered throughout the process. So I know she was very humble in saying visit anybody, but really, she's the best. So if you're in trouble, reach out to her. Or even if you're not in trouble yet and you're kind of thinking you might be, just reach out to any of us so that we can help you through the way. We're, it's one of those sayings that some of us might be getting tired of. We're all in it together, but we're all in a different boat. So reach out to the experts, get the help when you need it, no matter what it is. And we're going to try and get through all of this. So, Rebecca, do you have anything else to add?
Just a big thank you, Lisa, for allowing me to come and be part of what you've got going on here. Is amazing. It's it's clearly education focused. You're here to help people, get questions answered and that kind of thing. And it's just a pleasure to be associated with you and to hang out with you for for the hour. And yeah, thanks for that. I appreciate it.
Thank you for taking the time out. And everybody, if you put questions on Facebook, as if you've seen any of my other videos, you know that I'll make it, I'll figure it out sometime. I still haven't figured out how to have my Zoom on and have the Facebook questions up. So I'll review the video after and we'll be sure to get back to you, whether it's myself or Rebecca, somebody will. If you don't want to put your question on the comments, send me a message. We'll make sure that you're taken care of. And again, thanks so much, Rebecca. And I look forward to continuing working with you, and everybody have a fabulous weekend.
Yeah. Happy New Year as well. And thank you.